But we begin with the markets, where investors are monitoring a slew of storylines. Joining me now is Will McCoff, CIO at Prime Capital Financial. Will, welcome.
Thanks for having me.
So how is the conflict in Iran affecting your investing strategy?
So that's a great question. We've been telling our advisors and clients going back to late 2024 to expect more volatility coming out of Washington, D.C. And 2026 is really shaping up to be the year of geopolitical volatility. We had Greenland, Venezuela, now Iran. And so I think it's just expect volatility, which means you need to kind of core up your portfolio. Don't have growth overweights, be diversified in the small caps and international, and bonds certainly play a role right now too.
All right, and why do you feel the situation in Iran is presenting a heightened level of uncertainty to the market?
So what we saw was a pretty big sentiment shift overnight with regards to how the markets are reacting. I think most folks thought it was Venezuela all over again. It's going to be short and quick. But the temperature changed with the bombings or the drone attacks in Saudi Arabia embassy. So I think market participants are expecting a little more drawn out conflict here. And we've seen poly market odds come down for an April ceasefire from like 67% to under 60%. So market participants are preparing for a longer drawn out conflict, which could raise oil prices, which could affect inflation, which could affect rates and what the Fed's doing.
All right, and prior to the conflict in Iran, markets experienced choppiness due to questions about AI. Why is tech feeling more pressure now?
So in my opinion, what you're seeing with AI and Anthropic is a real-time re-rate of some growth stocks, i.e. software, to more core or value stocks. If you look at the S&P 500 growth and value, there's Mag 7 scattered across both of them. And so I think it's a hardware versus software conversation right now, with software becoming less growthy and potentially some IPOs filling that growth bucket later this year.
All right. And what is your outlook for when you say IPOs for the IPO market in 2026?
So it's probably the number one question we get from clients and advisors is how can I invest in SpaceX? It's a private company. We do offer private investments, so it's a little more difficult. And so I think SpaceX, XAI, potentially IPOing this year, Anthropic potentially IPOing this year, it's going to be two-pronged. It could either be private investors looking for exit liquidity and a sign of peak sentiment in the top, or they could be the new growth vehicles. Everybody thought that the top was when Google and Facebook IPO'd, but those turned out to be pretty good public market investments. So I think you'll just have to manage the risk in real time as it happens.
All right, and we understand you see opportunities with diversification, something you said hasn't been true for 15 years. Can you elaborate on this?
Yeah, so we've seen a very concentrated S&P 500 with the Mag 7 controlling like over 40% of the S&P index. So as that broadens out, small caps have caught a bid this year. International has been in vogue for better part of 18 months, and on the back of the Sell America trade, capital flows, weak dollar. And so I think it makes sense if you look at how expensive the U.S. is to diversify away from that. You're starting to see there's two things that control index values: earnings growth and multiples. And you're starting to see multiple expansion and earnings growth come online internationally, which is attractive to investors right now.
All right, and what sectors are you seeing as prime buying opportunities right now?
Again, I would probably be less sector specific, but if we had to get into sectors, the electrification play is big. We like Nextera, NE, Eaton. There's an ETF called Volt, which is interesting because it combines utilities and energy. So I think it's a two-pronged now, where you get kind of a hedge from AI data centers, but also a geopolitical hedge, so to say, with energy prices going up. Energy companies should benefit.
All right, and what advice are you giving clients amid the recent uncertainty?
Yeah, so it's tough. I mean, with geopolitical uncertainty, it's typically temporary. Markets maybe pull back 5, 6, 7%, and is it really going to affect the earnings growth of the S&P 500? Something prolonged could. And so I think it's all about staying the course, staying diversified, and not having overexposure to the expensive areas of the market right now.
Do you think there are any headlines that are kind of like flying under the radar that you think might make a big splash in 2026?
So Iran actually kind of flew under the radar. I think that's why we saw a muted reaction yesterday. But behind all the private debt BDC cracks and Anthropic killing software, you were starting to see the militarization ramp up in the Middle East, kind of as a third story there. It's now moved to the top. And so now that is dominating the headlines, you kind of have to look a layer below and continue to monitor how the private debt situation is doing and where those cracks may be. And that's going to ultimately be something more systemic if there's a credit crunch. I believe Jamie Dimon was out yesterday still warning about a potential upcoming credit problem. Credit spreads are starting to tick up, rates are starting to tick down, so the bond vigilantes are starting to be vigilant, which you need to pay attention to. So again, I think it's the growth story. Bassett was out there saying 7 to 8% nominal GDP growth. He may be right, it may just be real GDP growth. So we have to watch inflation, watch what the Fed's going to do to ultimately see if this lofty GDP growth expectation from the administration hits or not.
And yeah, GDP data recently came out. What was your takeaway from that?
So it's hard to say with the government shutdown, like how much that effect had on it. One thing I like about Washington, D.C. is they're very literal. Like what they say is what they do. And so you kind of have to take what they say. 7 to 8% GDP growth is huge. And now whether it happens or not is TBD. So we're going to be watching that. But again, I think with energy prices going up because of the conflict, you have to watch current inflation readings. And you still have this whole weird labor backdrop as well with the K economy of AI taking jobs away from folks. So it's going to be an interesting close this year. I mean, we've got 9 months to go, and it's going to be fun watching and investing alongside.
And I can't let you go without asking about the Fed. What are your predictions for 2026 in our last minute together?
So it's, again, it gets back to Washington, D.C. They won't lower rates out of the administration. So you have to think that pressure is going to flow through to Fed policy. And, it's interesting that Wash still hasn't been nominated. It's like, what's the holdup there? But the Fed's a great topic. It's probably going to be a few cuts this year, barring some type of if inflation spike. It may be more than a few cuts, but if the economy gets stronger, it may not be cuts. So it's all this multi-level game theory as to what they're going to do that you could play. But at the end of the day, the administration wants lower rates. So I think that rates are going to go lower.
All right, Will McCoff, CIO at Prime Capital Financial. Thank you for joining us.
Thank you.